But I do think, like you said, I always encourage people, like, dip your toe in, like, learn about real estate. It's one of the greatest wealth generators ever. Historically, any of the billionaires and multimillionaires have made their money by owning a business or real estate. That's pretty much it. So learn about it and then figure out what flavor fits for you, and don't feel like you need to have somebody else's approach. We're really aggressive and we are operators. We love operating stuff. Most people don't. Most people want to, even if they're business owners, they're like, I got my one thing and I go home and then I don't want to be thinking about all this other stuff.
And if you want to do it yourself and you blend real estate with your business, there's an unfair advantage in 3 ways. The first one is the depreciation, which you mentioned, Chris. You do a cost segregation study, you take a K1 loss that is just a paper loss that can help you in your tax situation offset. So that's a year 1 advantage. Then when you're operating, you're not paying another landlord. That money's not going into the trash. It's going back into your business and paying down that building. And you get tenants to do it as well. So now you have a cash flow component that assists you if anything goes wrong with your business. There's a little bit of, let's say, excess safety net that's there. And third, when you exit, too many people mistake it to where the stock market's been pretty good the last few years. I could earn 18% there and cash flow from this building maybe 6.5% or 6%.
Welcome to the Exceptional Companies Podcast, a podcast for purpose-led entrepreneurs looking to master the art of buying, selling, or optimizing small businesses. Your host, Chris Seegers, founder of Exceptional Companies and author of Selling Main Street, has over a decade of experience starting, buying, and leading successful businesses. He's here to guide you through the complex world of business transactions and growth. Each week, we dive deep with actionable insights, expert interviews, and real-world strategies to activate and equip you to live exceptionally and build exceptional businesses. Now, let's dive into today's episode. Here's your host, Chris Seegers.
Welcome to the Exceptional Companies Podcast, where we discuss how to buy, grow, and eventually sell your business to fulfill your personal and wealth goals. I'm your host, Chris Seegers, and I have a recurring guest, Ian Noble. So Ian is the founder of Run Steady Investments. Man, he's been very well experienced in owning small businesses and real estate. He's been in that kind of 14 to 15 years. He's based out of Austin, Texas. And the first conversation we had was really talking about his journey from owning a business, exiting that business, and then getting more heavy into real estate and raising funds around real estate. And we were just talking about, hey, should we have a conversation around the intersection of real estate and business and the benefits of those asset classes? And we've leveraged them in a lot of really great ways, and so is he. So Ian, welcome back to the show, brother.
Thanks for having me again.
Yeah, man, this is going to be a lot of fun. So it's really interesting. On the business acquisition side, oftentimes people start in real estate and they buy single family homes. I say playing Monopoly, right? You start with single family homes and you buy some multi, and then maybe you buy a commercial building. And then eventually you get to a point and you're like, okay, not that I've mastered real estate, but I know it pretty well. And now I'm interested in taking the skills that I've developed into something that might have higher cash flow. And that's what we did. We started buying businesses. And then you get focused on that and you get kicked in the teeth for a couple years. And then you start mastering the operation skills. And then you start paying a ton of taxes. And you're like, crap, how do I not pay the government so much money every year because my businesses are going well and my real estate is kicking off cash flow? And then we kind of circled back to real estate and started really learning about any sort of legal tax benefit, including cost segregation studies and ways that you can actually buy real estate and accelerate your depreciation or bring depreciation forward. So really wanted to kick it over to you. And a lot of our listeners own both businesses and real estate. What are some of the ways that you've approached using both those asset classes to benefit you and your family and what you're trying to build in life?
Well, you said it right earlier that you explored all these different areas and then circled back to real estate. When it comes to income and building wealth, it is not what you earn, it's what you keep. And so business owners constantly will look for these strategies to get them in a better position, because at the end of the day, we do this for pride and other various reasons, but money is a motivating factor and you should be making smart decisions. So I think that real estate is an important tool for people to integrate into their business as they're running their day-to-day. I hear a lot of people think that when I exit, maybe I'll get in then, or I don't have time to do real estate. Yet there are a lot of strategies that people can at least get their feet wet in to let them start building wealth outside of their business a little bit earlier on. And so too many business owners will focus just on everything goes into my business, as they should, because I think there's no better way from a cash flow perspective, like you mentioned, for business owners to make a good living. Real estate, in my opinion, does not bring the cash flow that a business can bring you, especially if you run an effective business, or you have something that you've built that's great. However, it's in terms of long-term appreciation and building wealth, it's crucial. And even if you think that you're not a real estate person, because many are not, it's not rocket science, and there are a lot of tools out there to get people involved, even if they're not running the day-to-day aspect of it. So it's definitely worth a conversation for everyone to start in your circle and see if any successful business owner that you know also dabbles in real estate, and perhaps explore, is that a good option for you? Is that something that fits with your appetite?
Yeah, so let's break that up a little bit between active and passive. So a lot of business owners start with, let's say they're blue collar, white collar services. They're like, hey, I'm going to own my office building, or I'm going to own my shop, or I'm going to own, the yard that we've got all our vehicles or equipment in. And that's really beneficial. And one of the things I've encouraged folks, so I'll give you an example from us. We're looking at buying an office building. Number one, I want to own the space. I want to be able to build it out the way we are. My wife's very particular and has really good interior design taste. And it's like, we're paying somebody a lot of money right now to stay in a building, and we're not good tenants, and not in a mean way, but I just hate paying somebody else money to do something that we could have. So as we think about it, we first have an expense, right, that we can drop to the bottom line and start paying off, principal and interest. So that's some benefit. Then we're going to buy an office building that has some other tenants. So hopefully we're offsetting at least partially our total expense, and maybe even making a little money, although cap rates aren't great where we are. But then I said, hey, we really need a model. If we take this $3 million acquisition and if we do a cost segregation study, today, what would that save us on taxes? And let's say it's, in between 150 to 300 grand. I mean, that's real money. That
substantial.
Right. So think about, even if you're just like, hey, I'm going to take $300,000 that I would have paid the government. Now I get to keep those dollars. Even if you just made 10% on that for the next 50 years, like, it's millions of dollars, right? So and you still need to buy real estate that makes sense, right? Don't just go buy it for the tax benefit and then you get hammered and you're losing money and you end up filing personal bankruptcy. I'm not encouraging that by any means. However, for us, we've got so much cash flow that I'm like, we really need to look at the tax benefit side of it too. And then, so that's active, right? And you could do whatever, right? Buy all kinds of real estate within that kind of construct. But then there's the passive side. And I want you to talk a little bit about that. Like, you've got a fund. There's all kinds of cool ways that business owners that might have cash sitting on the sidelines can figure out a way to get some yield on it. How would you approach that? Because you've owned a business and a bunch of real estate.
I have a fund that I wish I would have known about a similar strategy back in the day, because I was that person that had too much cash sitting in the checking account, and it would just kind of sit there. I knew, you could look at your monthly cadence and figure out, when is rent due, what's my payroll going to be, and other big ticket expenses depending on how your business is structured. But often there was too much. Or you could set aside, what I was doing was every day we were moving aside money automatically. This wasn't a manual task. I don't advise doing manual tasks, especially when it comes to saving money. Put aside money each day and build yourself a cushion so that if something breaks down in your business or your tax bills due, you have it there. The key thing that we introduce to business owners now is making sure that they're doing something with that money while it sits. If it's January of this year and you're trying to figure out, well, when you're paying quarterly taxes for your business, but you should be able to model that and say, okay, well, I'm going to make up a number. Pretend you have $200,000 sitting in an account. And you'll use that over the course of the year, but you don't need to use all of it at this point. And so you're at a disadvantage by letting that cash sit, because the bank is taking that money that you have in one of the big bank checking accounts, and they're using it to go and lend on that or to make money through other accounts. So my question is, why aren't business owners doing it? You should use that as a strategy wherever you're at in your business to make sure that you're earning on what you've already earned, because you need to give that dollar a job. And when it sits, somebody else is using you for their benefit. And I think there's a problem with that. It's your money. So you talk about a lot of people buying their own building. And I do recommend that if you're in a place with your business where you can do that. But there are passive options that allow you to place money into a fund, let the others do the work, similar to you having employees, and they begin to pay you back. And so that's the biggest push that I am making this year for our clients and business owners. I'm in Austin, but we work with people everywhere. And if you have a safe alternative, and I'm talking low risk, not excessively high returns, this is not something that's going to wow you. You need stability in your business, especially if that cash flow is something your livelihood depends on. But don't let it sit there and earn 0%. That's a mistake that too many people have, and you should get involved one way or the other. Chris, let me ask you, you talk about buying an office building. You guys make yourself the tenant. Do you run into situations to where business owners are using this as a regular strategy, or is it something that's a little bit foreign to most of the businesses you speak with?
No, I think most businesses have, the majority of businesses have some sort of real estate exposure. And it's just, oh yeah, eventually, and maybe they're 10 years in, they're like, we have a bunch of cash, and the shop came up for sale that we're already a tenant in, and it was a decent deal. And I always tell people on all sides, I'm like, hey, when you buy real estate, the real estate should stand up, right? Like I said, like you still want to get the tax benefit and have that be part of your conversation, but you should still be like, if the building's really worth $2 million, don't pay $3 million just because you're like, I'm going to be a tenant and we can afford it. So generally that's what happens. And then I think there's two paths. One is folks that buy the building and are like, whoa, this is really great. And we save this much. And now we get this depreciation every year. And this happened. And now we have control. And then they start looking at other stuff. Maybe they buy some single family. Maybe they buy some multifamily. Or they're like, no, I hate this. I hate managing tenants and I don't want to do it. And it's fine if it's just us. Now we have a really good team. So we've got a whole infrastructure around managing our existing real estate. So adding another building is like no problem. But I do think, like you said, I always encourage people like dip your toe in, like learn about real estate. It's one of the greatest wealth generators ever. Historically, any of the billionaires or multimillionaires have made their money by owning a business or real estate. That's pretty much it. So learn about it and then figure out what flavor fits for you, and don't feel like you need to have somebody else's approach. We're really aggressive and we are operators. We love operating stuff. Most people don't. Most people want to, even if they're business owners, they're like, I got my one thing and I go home and then I don't want to be thinking about all this other stuff. So that's where, the approach of partnering up with somebody like you might be a good option.
And if you want to do it yourself and you blend real estate with your business, there's an unfair advantage in 3 ways. The first one is the depreciation, which you mentioned, Chris. You do a cost segregation study, you take a K1 loss that is just a paper loss that can help you in your tax situation offset. So that's a year 1 advantage. Then when you're operating, you're not paying another landlord. That money's not going into the trash. It's going back into your business and paying down that building. And you get tenants to do it as well. So now you have a cash flow component that assists you if anything goes wrong with your business. There's a little bit of, let's say, excess safety net that's there. And third, when you exit, 4, I'm going to add a fourth. On the third, there's the option, let's say you sell your business and your tenant is going to take over, the new business owner will take over. They can lease that space from you. You keep the building, and then you have residual income when it's said and done. And you already know and trust the business that is your anchor tenant in that building. Mm-hmm. And then not only that, you get the appreciation upside that comes later. So too many people mistake it to where the stock market's been pretty good the last few years. I could earn 18% there, and cash flow from this building maybe 6.5% or 6%. Again, this is something that doesn't react to the cycles as quickly as the market does, but it creates a long-term wealth strategy for the people that get involved with it that have 4 different parts to where you can make money. The most crucial one is that depreciation one in year 1, because that's substantial. If you do a study, a cost segregation study, and let's say that amount comes back for minus $200K. Well, there's a substantial tax benefit and savings that goes in your pocket year 1. Well, it's already in your pocket, but it's not money that you'll send to the IRS. Mm-hmm. Again, it's not what you earn, it's what you keep. So it's a really good strategy for people to assess. And that is not overly complex. It's safe. I say safe. It's close to home. You're in that building every day. So if you have that opportunity as a business owner, start there. I have friends in Austin that just did this with their chiropractic clinic. Same space for 17 years, husband and wife team. They buy the building. They fill up the rest of the office suites. And someday when they retire, they're going to sell a very successful chiropractic clinic in Austin. And when they do, they should probably continue to own that real estate. And now they have income after the sale. It's a great strategy.
So I want to add another couple components. The fifth component is 1031 exchanges. So let's say you sell your business, you lease the real estate, and then 10 years from now, you're like, you know what? I really want to sell the building. I'm just tired of even dealing with the minor things that come up. You can do a like-kind exchange into another real property asset. And here's the thing that we do very different. It does not have to be real estate. And obviously, you need to engage an attorney and somebody that does these transactions. This is not legal or financial advice, but we've done a lot of these. We've probably done 50 1031 exchanges personally. You can 1031 exchange that property into properly formed Delaware statutory trusts. You can 1031 it into royalty trusts. So there's about a dozen publicly traded royalty trusts on the stock market that have commodities or oil production. With Permian Basin royalty trusts, Sabine, there's a bunch of them. You need to do your research. There's volatility with commodities. There's all kinds of good and bad about it, right? But you can actually, let's say your property's worth $1 million, you can sell it for $1 million, 1031 into either real estate, another real estate asset, or into these other options and defer that tax. Now, with the right attorney, you can actually do this for a long enough time to where you can get it into an estate for your kids and they don't pay any taxes. So there's just tons of benefits to doing this. So I want to take all the things that we just said and synthesize it. This is what I communicate with folks. Being W-2 and investing in the market is the least taxed advantage position you could possibly be in. So you may say, yeah, it's low risk and, we make 7 to 11% and my job is low risk. First of all, I don't agree with any of those, but you have zero tax advantage. You pay your taxes and you don't get any benefit. Your CPA is going to be like, good job, Chris, you made more money and you paid 35% to the government. And you're like, well, how do I have a benefit? Well, start a business, depreciate your equipment, buy some real estate, depreciate the equipment and the real estate. Like if you're just W-2 and you're investing in the market, maybe you have less risk. I don't really believe that's correct. But all of a sudden, you just have zero tax benefit that you can actually utilize on a yearly basis. So that's why I always say, look, it's got to fit your profile and what you want to build in life. But you should at least know it, right? Understand it's not real estate is not complicated. You can go buy a book. You can listen to Bigger Pockets and learn. And then it's a math equation. Go to your CPA and say, hey, here's how much I'm making. What should I be doing? If I bought this piece of property or I invested in this fund that gave me this tax benefit, like what are the dollars?
A question that we love to ask our potential clients is, do you know what your business is worth? And if you sold your business today, would it fulfill your personal and financial goals? If you're a successful business owner, but you don't know when or how to sell your business, and if you've ever wondered what each additional day in your business is actually costing you, we'd love to chat. If you're ready to spend more time with your family, your friends, or traveling, come sit down with our team, because when you work with exceptional business advisors, we'll help you build a blueprint to sell your business successfully and help you create, capture, and achieve your dream life. Don't wait for the right time. The time's now. Go ahead and scan the QR code or book a discovery appointment at excoadvisors.com.
And the third piece, actually, let me pause there. Did you have some thoughts on that? And then I want to go into giving, because giving is actually another way that you can utilize the tax code. But before we go there, any thoughts on that?
Yes. When it comes to your CPA, you should be asking them, you plan out what you're going to make that year, and you should be asking them, is there any sort of tax advantage way or some sort of system that I can put in place for our situation to put us in a better spot? Because you don't want to continue to pay just whatever the line item tax is. Sometimes you can avoid it, and yes, then you need to pay it. But to your point, Chris, you should be asking your CPA. What I've found is that a lot of CPAs are very good at keeping your books clean, doing the bookkeeping aspect of it, but many of them are not trained to look outside of the box. You'd be surprised how many people have a CPA that's fully competent in tax code or keeping somebody compliant for their own business, but when it comes to incorporating real estate or other offsets, it's a non-discussion. They'll have to go do research on it. Let me look into that and get back to you. If you love your CPA, keep them, but advise with somebody else that's a tax strategist or asset and tax strategy or planners to make sure that they're working with your CPA if your CPA is not doing that for you. So that's another key component. Many times people just don't know which questions to ask, and you should be, on schedule each year asking your CPA, what can I do this year? What can I do this year? And if they don't have those answers for you, engage with somebody else to at least help that CPA along the journey so that you can ultimately end up winning.
That's really good counsel, man. And we recommend that with any of your advisors. We have what we call the owner advantages of one of our core values in our wealth firm and the A&D advisory in our insurance company. We own the thing. So when we provide counsel, we're like, this is what we have done, not, hey, this is something that I heard on this podcast, or this is what I read in a book. Find a tax planner that really knows it, that does a ton of transactions. So ask them, hey, how much real estate do you work on? And if they say, well, on occasion, I'll look at it. No, not the right person. If they're like, man, I got 50 clients and all we do is real estate and business and this and that. Okay, great. The other thing, though, if you can get this, and this is kind of a unicorn, is somebody who's a tax planner, who their clients are doing the things you want to do, that also does it. And that could be, it's the same for a financial advisor or a real estate agent or anything. It's like, how many times do you engage a real estate agent or you talk to them at an event and they're talking about how great of an investment real estate is. And you're like, oh, great. Like, tell me about the assets you own. And they're like, oh, well, I don't own any. And you're like, really? So you're telling me I should buy this commercial building, but you actually don't own any real estate. Like, this doesn't seem like it has congruency. So I love finding the folks, because those are the people, like, you find a commercial real estate agent that owns real estate. Eventually, all of us run out of money. So they're going to have more deals that they're like, man, if I had the money, I'd buy this deal. Or, hey, we are going to raise a fund like Ian did. We're going to raise a fund around this deal because it's such a good deal and I've looked at 1,000 of them. So we like to find advisors that are doing the things within that space, because the counsel they give you is more like, this is exactly what I would do if we were in this opportunity, and we've already done this 20 times. I love that, man. That's really good counsel.
Also,
So
that CPA or that tax team, their goal should be to reduce your taxes to as much as they legally can.
100%.
So if your CPA is comfortable with you paying, top tax bracket, and they say, well, hey, good job, don't be complaining about that, you had a good year, they're wrong. You need to find someone to get on your team to reduce that. You might not be able to reduce your ordinary income, but you can use real estate and other assets that are taxed at a lower rate to offset that or eat into some of that. So you need to be looking at this from a two-part strategy of make as much money as you can in the thing that you do best, probably your business. Number two, offset as much as you can while building wealth at the same time in real estate or some other asset class or type of investment. There's oil and gas. There's lots of things that are out there. But do something outside of that. Don't just check the box and say, I got to pay 35% this year. It's no good.
Yeah, for sure. The other thing that I do personally to really drive this home is I always take these dollars and put them in a time value calculator. Just like, all right, if we think we're going to live another 40 or 50 years and we save 10 grand a year in taxes, even, on the low side, what would that dollar amount be worth in 20 years, 30 years, 40 years? Because oftentimes people are like, it's probably not that much, but if you could get from 35 to 20% and you're making decent money, like, it could be worth $5 million to your kids or to you. I mean, it's like big money when you say, hey, like you said, those dollars need to go to work, right? Richest man in Babylon, make those dollars like go to work for you. Like, take those dollars and invest them. But even if you got 10% or 7% return, and you could save 10 to 20 grand a year, like, it's big money. So that's why, this year we got to buy some real estate, because I'm like, man, I know the tax bill we're going to get hit with. And so there's an urgency, not only because I want to buy real estate because I love it, but also I'm like, hey, if we save this amount of money, the future value of that is actually millions of dollars, not just this amount today. That's awesome, man. Okay, so another thing we've become experts in and we're learning even more about is just understanding how to structure your giving. And we've talked, so I had one of the presidents of the region for National Christian Foundation, which is a donor advised fund. And there's a bunch of groups that they're doing what they call DAFs, or donor advised funds. But if giving is an important thing to you, and I'm talking to the audience, and maybe it isn't. If it isn't, no problem. I think it's something that should be at least a conversation. But if giving is something important to you, also go do some research on how do you create the most tax advantaged giving structure. because there are so many benefits in the tax code to, giving pieces of your business or pieces of real estate. When you get to the point where you're like, we have more money than ever we would, and our kids are fine, and maybe, we've got this really incredible giving thing. So that's kind of tier one, is just, giving assets or cash or whatever into this donor advised fund and getting a tax benefit. If you give $100,000 today, you get that tax benefit that year, and maybe you need it, right? And then you don't have to actually gift all that money away. Usually you don't have to give any of it annually. The whole DAF, which usually they're multi-billion, have to give 5% a year or something like that. But the second piece that's been really interesting, which is kind of a big progressive area, is you can actually gift that money or asset into the DAF, and then you can actually reinvest that into something. So you could actually invest in a business within your DAF that's growing within the DAF that is then giving tax advantage dollars away. Or you could invest into a impact fund, or into a real estate fund, or into water well drilling company in Uganda, whatever is your passion. But you get to do this in a way that the government doesn't get any of those monies, and you can actually amplify that capital within the DAF. So my wife and I have we've always given money away. We're believers, so we think it's just part of what we need to do as believers. But we just didn't like giving it away to an organization that spent it that year. And oftentimes the churches aren't that great a fiduciary, right? You give them $100,000, they're going to find a way to spend it that year. But if we can build it into a donor advised fund and help our operational systems actually grow that corpus dramatically and get the benefit from it, then it becomes a lot of fun, where your skill set of the building is also the skill set of the giving. And then you get to teach your kids and other people how to be really generous.
The way you speak about it is so crucial, because you talked earlier about getting involved with somebody who's done it before. And that speaks volumes to the way that you're explaining this, because there are a lot of complex ways that your average person doesn't know about, where they can help, they can benefit themselves, and it will set them up in a better position than they were before. And that's the name of the game. None of this stuff is life-changing or revolutionary, but you need to be doing incremental changes that will benefit your situation. In that case, with giving, helping others. So if you can plan your business in advance, let's say you want to sell or retire in 2, 3, 4 years, start planning this stuff before. I wish I would have. I didn't plan well enough when I sold. I have zero complaints about exiting and moving on to the next chapter of my life. However, it's difficult when you don't have time and you don't plan as well as you could have. And you see that in hindsight that, man, there were many different ways I could have done this. In my case, I sold in October of 23. I had 2 months left in my planning. Everything, all my energy went into that year, and especially the last few months, getting that deal done. So here comes October, and all of a sudden, I'm going to have the best year I've ever had because I sold, and here comes a tax bill. So if you can speak to someone that has the knowledge, Chris, I know that y'all's team helps people with this, make sure to just do so as a business owner, because that advice is crucial to what you can keep and the legacy that you built. You put in all that time and effort into your business for something. It's not to give it all away. So talk to people that have done it, and make sure you're aligning with people that have the same mindset, not just, well, you sold and you have a gain and you got to pay the tax. That's the way this works. Find someone that can help you differently.
100%. And the earlier you can get in, and just, you don't have to, I'm not like, the legal expert or the accounting expert or anything like that, but we've just done it enough to where we know the basics and we know when to call, phone a friend. So get a basic understanding and do it early. If you're 30 and you're like, hey, I know I'm going to build this business into something dramatic, like 20 million, 30 million, 100 million, $1 billion. I always tell people, so when we've had a couple exits, or just you sell a real estate asset or something like that, your CPA isn't going to help you generally. They're going to come to you and say, well, you got to pay this amount of money. But if you have a conversation this is what I tell my accountant. I say, look, I want to pay the government as zero if I can, right? They're a terrible fiduciary. I don't want my dollars going to them. So even if you're like, I don't really care about giving money and I don't really have a great place to give it, I'm like, well, if you had a chance to give $100,000 to the government and just have them waste it, which they do, or you could take $100,000 and put it in a DAF or some other structure and just give it away as you see fit. Heck, I don't care if you give it away to Humane Society cats. Like, that's probably more in line with what you would want to do, right? Find something that you're excited about. But you get, instead of just being like, well, I just had to cut a check, you get an option of saying, well, what if I gave it to something else or invested in something else or deferred the gain or did this. I like being in the driver's seat where you've got the leverage. And if you just decide, hey, it's not worth it, I'm going to pay taxes, great, right? But at least you've got the options.
Well, it's funny, too, that you mentioned Phone a Friend because it made me think of Who Wants to Be a Millionaire. Remember that game show?
For sure. Oh, yeah.
Phone a friend, and it's crucial to do so. And in this case, for the purposes of this conversation, there are a lot of people that are millionaires, want to continue to be so, or get themselves on that path. And so it's important to reach out and get help.
For sure. I love it, man. Well, this has been such a good conversation. I think this will help a lot of folks. And once again, this is just the tip of the iceberg. There's so many good resources. Let's talk a little bit about that. So as you've grown your expertise both in owning a business and real estate, what are some of the books or tools or podcasts or just things that you're like, man, I learned a ton from this group or from this resource?
A book you've probably heard referenced 1,000 times by now is if you have not read Rich Dad Poor Dad by Robert Kiyosaki, read it. It just changes the mindset. It's not a strategy that's too difficult, but it will make you think about life differently. So I would do that. And also try to speak to people that have done it. You get a lot of advice from friends and family about how you should run your business or life, but talk to someone that has done it. So there's lots of books. There's tons of podcasts that are out there now. Honestly, start with somebody local that you know or a voice that you trust and just engage with them, because all of this stuff we're talking about today doesn't work without good people. So everything on paper that you see, pro formas and returns or what could be, does not happen the way it should unless there's good people running it. And that starts with trust, relationships, etc. So really focus on that and find someone that you can trust, because those are the people that will be right alongside with you, because not only do they believe in it, but they're doing it too.
I love it, man. The quote that I came up with a couple years ago too that I think is important is when someone is giving you counsel, ask them to see the math. Be like, hey, can you show me the math? If they're like, I've invested in all these real estate deals and I've made $1 billion and blah, blah, blah. Most people are, probably over exaggerating what they've done. So ask them, be like, oh, that's so great. Could you walk me through how you did that? And then a lot of times they're like, well, I actually just invested as an LP into this apartment complex and they own $1 billion worth of assets, not me. And you're like, okay, well, that's not really what I was going after. But if you ask Ian and you're like, hey, Ian, how do I buy real estate? How have you done it? How do you blah, blah, blah? Show me the math. He'll be like, sweet, let's get a chalkboard out or a whiteboard or whatever. I'll show you exactly how it's done. If you asked us, how do you buy business or real estate or oil and gas? It'd be like, here's what we've done. Here's the transaction. Here's one that went sideways. Here's one that went well. Here's what we learned from that. But when you're getting counsel, ask people to show you the math. Because there's a lot of people that are getting into small business acquisition or other things because they're seeing somebody on social media say, hey, this is super easy and it's passive and you put 50 grand and you get $500,000 worth of cash flow and then you hire a VA and you never have to look at it again. And that's just categorically false. And so we're getting a lot of, young people that are coming to us and I'm like, hey, let me show you the math of the hard work. I believe it's worth it, but you got to decide, is this math something you want to do and put the effort into? And if it isn't, that's okay too. You may say, wow, that's way too hard. I'm going to keep my W-2, and that's fine too. But just make sure that whatever counsel you're getting from any advisor, they can literally show you A to Z the math. And Ian, that's really good, man.
Well, I want to comment on what you mentioned as well. Make them show you the math, but also trust your gut. It always goes back to the person that's doing it. So if you're getting this advice and you feel like this person's leading you on, or perhaps they're not being clear on something, they probably are. So you really want to focus on someone that has done it and that you trust in your gut, because there are 1,000 people out there that have. So find that person and align with them.
I love it, man. Ian, it's always a pleasure. We'll just have to do this maybe once a quarter and just catch up on kind of assets and how to think strategically around deferring taxes or saving money. But really appreciate it. Remind everybody again, Ian, where they can find you.
For the listeners of this show, and we can add it in the show notes, I'll include a guide that helps business owners look at passive investing and low risk options. You should be low risk, and I believe in that, and this is a helpful tool to get you there. So that's probably the most value I can give you today, but definitely take a look, and my information will be there if you want to have a conversation about it, or runsteadyinvestments.com is my website.
Love it, man. Ian, thank you so much for joining us again, and we'll see you on down the road.
Thanks, Chris. Appreciate it.
Thanks for joining us this week on the Exceptional Companies Podcast. Make sure to subscribe to the show on iTunes, Spotify, YouTube, or via RSS so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes, or if you'd simply tell a friend about the show, that would help us out too. If you like this show, please reach out through our website, www.excoadvisors.com, for free tools to order a copy of Selling Main Street, or to sign up for our free webinar on how to sell your Main Street business.